Hey guys, Jason Schnitzer with Remax Tiffany Real Estate. What I've got for you today is your How's the Real Estate Market segment for week 37 of this 2022 real estate market. As always, I like to bring you the latest and the greatest what's happened here in Southern California in the last 7 days. The biggest news that I've got for you is the Feds came out, and of course, interest rates are going up, and that's because inflation numbers are not near as good as they hoped for. Jobs, not as many jobs, and just GDP stuff with inflation is worse than expected. So again, the Fed's only way to combat inflation is to raise rates. So this is not really shocking news for most people in the lending industry just because they've expected this. So part of it is kind of factored into what rates are doing right now, but part not. Over the last several days, we've definitely seen rates increase all the way up to about 6% or so. And this all depends on how much money that you're borrowing and whether or not you're paying points. But no points and high balance loans, you're looking at about 6% interest rate. And we're starting to see it slightly affect the market with regards to demand. On average over the past, we'll call it 6 months, we've seen anywhere between 500 to 800 homes coming on and off the market every single week. This week, the houses coming on the market were more in the 300 range, and just over that, about 415 homes sold. So our overall activity is slowing down just a little bit, but again, this is sort of typical for going into the fourth quarter of the year. So I wouldn't say the sky is falling by any means, but I will say you want to keep an eye out on reports about inflation and how they're going to affect interest rates. Because if we do, like I've been saying for like the past 2 years now, at least since I've been doing these videos, is when interest rates go up, it affects affordability for the buyers. And what that's going to do is going to lead to a decrease in demand and a potential rise in inventory and supply, which technically we still have less of than what we're used to in what is a normal market. But what that's going to allow for is more of a normal market. And what I mean by that is the contingency buyer, the person that has their equity stocked in their house and maybe doesn't have 20% saved up. If they want to do an up leg buy, they need to sell their house in order to buy a house. And we're starting to see that sort of option open up more and more because it was basically non-existent from 2020 to the beginning of 2022 just because we had such high demand. If you didn't have money in the bank and you were a contingency, you got to the back of the line. So a definite potential that is coming up more and more for the clients that we're talking to. So if you're curious how your house stacks up in this 2022 market, or plans for either the next few weeks or towards the end of the year and next year, we're meeting with clients that are starting to maybe think about doing something in the beginning of next year. Now's a great time because we can put our heads together. We can put you on searches to give you an idea of what your house might be worth, and then just kind of be monitoring that as time goes on. So always the best time is now. The more information and the more information that we can provide for you guys, the more armed you can be with knowledge, so that when you go to make your decision on what is your most expensive asset, your real estate portfolio, you have all the tools to do that for the best for you and your family. So thanks for watching, you guys. I'll catch you next week. Hey guys, thanks again for watching this week's episode of O.C Realtor Talk. If you gained any value from this video, we'd really appreciate it if you liked, subscribed, and followed us on all our social media platforms.
Jason, I believe is really, really important for you, whether you're buying a house or selling a house, is understanding the process and knowing exactly what you're getting into. So if you ever have any questions, just follow the links below and we'll get you those answers.